So today we're going to talk about two things I'm willing to bet you majority of you do not know or understand about cryptocurrency. And these are big things. These are two things that can make a difference between you making a shit ton of money or losing a shit ton of money. And for some of you guys watching this is just, you're going to think to yourself, oh, this is just common sense. This is stuff I've already known. And the reason you probably already know this is because you've probably lost a lot of money or made a lot of money because of these two reasons that you keep in mind. But something we are going to discuss before we talk about those 2 points is central banks sell gold for the first time in a decade. And the Bitcoin community is reacting. Like, they are fully reacting. Everyone thinks that this is going to be like the super bullish news at Bitcoin to the moon because central banks are selling gold. I'm going to bring some perspective to that, okay? It's up for you to decide. If you think that's bullish, that's great. If you think it's bearish, that's great. If you think it's just completely indifferent and it's just a part of another market adapting to the whole crazy 2020 cycle, that's great too. But I'm going to present to you some information on that and let you come to your own conclusion. I will also share my conclusion as well. Now, before we take a deep dive into this and we talk about the sexy price of Bitcoin right now, make sure you smash that subscribe button. YouTube is starting to do that whole shadow banning bullcrap all over again. If you look at some of your bigger cryptocurrency YouTube channels, you're starting to see that they're getting reduction reviews as well. So help us out. Smash subscribe and most importantly, hit that like button. So central banks sell gold for the first time in a decade. And yeah, that's a pretty significant thing. That's a significant move. That is not something that should go unnoticed. The selling was driven by Uzbekistan and Turkey, while Russia's central bank posted its first quarterly sell in 13 years as well. It seems that Citigroup has predicted that the central bank demand would rebound in 2021 after slowing this year from a near record purchases in both 2018 and 2019. So 2018, 2019, gold was bought in record amounts. This year, they're offboarding. The question is, why is that? Now, a lot of people will say, oh, because we're going to have a collapse. Oh, because things are going to fall apart on us. I'm going to take a more practical approach on this one, okay? So this is another article right here I use for my research. Let me move myself out the way. So volatile gold price action is triggered by low volume and aggressive flow before the U.S. elections. Now, when we say low gold volume, let's talk about things that can contribute to gold volume. Let's talk about jewelry sales, for instance. Right now, in 2020, let's be realistic. How many people right now, okay, are going out there and buying rings, buying necklaces and bracelets, earrings and diamonds and freaking gold watches? That number is pretty low. They're still out there. They're still out there, especially those that are pretty wealthy and well off and not fazed by 2020 and the chaos. But for the masses, that is not the case. Even those that are in low and lower middle income enjoy jewelry. People like to buy stuff for their wives, their girlfriends, or themselves. That market is not there. If you actually go look at companies here, like in the U.S., we have K Jewelers and Zales and Helzberg Diamonds and places like that. If you actually go and look at their sales reports right now, it's atrocious. It's hurting. It's really, really, really bad. Now, some say that the massive purchases lately of computers and laptops, because people working at home, should have contributed to the increase of gold or silver as far as volume goes. But the amount of those precious metals that those pieces of technology use are pretty low. Not substantial enough to actually help out. Now, I want to highlight this last paragraph right here. The longer-term narrative has attracted a swarm of gold bugs who are at risk of liquidating. While position sizes are in line with expectations, the number of traders long gold is elevated, which suggests a risk to their positions should the bullish gold narrative face adversity. The strategist wrote, further probing into who is long, COMEX Gold reveals that other reportables, a category which includes proprietary trading houses, algorithmic traders, and local traders, are largely behind this speculative bet. Now, remember, it's the key word in this whole thing at the very last sentence, or the last part of the last sentence is, a largely behind this speculative bet. It's a speculative bet. All this is always a bet. We don't know what's going to happen tomorrow. And the gold market, well, it's one of those things that can face volatility just like anything else. The story is here, 2018 and 2019, a lot of these equity houses, a lot of these institutions overloaded themselves with gold. 2020 resulted in the lowest volume of gold usage and purchases by retail. Remember, retail is needed to justify what institutionals do. They need our money. Our money isn't pouring into precious metals, golds, and things like that right now. So it only makes sense. That's one contributing factor. And also on top of that, the whole gold supply, the supply chain, the trading, the whole thing is disrupted. Naturally, I don't think this is anything like super crazy. I think this is just another day in the office, trading, looking at the market and the dynamics and what you need to do to minimize your risk. That is what I see here. I don't see anything that says global pandemic is taking down the gold market. Global pandemic is going to destroy central banks. I don't see that. There's nothing in here that indicates that. Now, a lot of people are saying that, oh, gold is being sold. Now Bitcoin is going up and people are going to buy Bitcoin. Cool. Maybe that's a potential. Maybe that's why some people went in there and bought some Bitcoin. Or the other potential is we are still tied to the S&P 500. Okay, it doesn't matter what the Dow does. Like I noticed when the Dow went down, everyone started making a big craze about Bitcoin. The Dow was going down as Bitcoin was going up. Don't forget that. So if you compare the chart of the S&P 500, especially if you're looking at the one-day chart, I mean, they are eerily similar. They are on par together. So the S&P 500 is doing good today. So is Bitcoin. Am I going to say that the reason Bitcoin is doing good today is because of the gold news? If that's the case, that means the S&P 500 is doing well as well because central banks are selling gold. I'm not a professional. I just don't think that sounds, very kosher or even makes much sense in my opinion. But if I'm wrong, I'm open to being corrected. I'm open to you guys leaving some comments and telling me about, what am I missing here. Now, let's dive into the two things that I am very certain a large portion of you guys don't know, all right, or don't quite understand about cryptocurrency. I guess the first thing that we're going to cover is when it comes to ground level projects, something brand new. Let's just say you've done all your research. Let's just say you went in there, you talked to the team on Telegram, you did everything you could, and you think you have the accurate picture of the project. Well, lesson number one, what you see is not what you're going to get. That's the bottom line rule with 90% of startup crypto projects. The 10% exception is the ones who already built a platform first. Okay, those are rare. Those are very rare. There's very rare situations where you see that you can go on GitHub before they even did a coin, before they did an offer. They went on GitHub, okay, and they built a product. They built something that's working, and then they went out to the masses. Okay, that is the only exception. But 90% of the time, that's not the case. What happens is you have a white paper. You have promise. They're promised to deliver. They're promised to execute. But from the day they get started to the day that if they execute, there's almost a near 100% probability that they will not be, all right, in the end, what they said they were going to be at the beginning. That's not a bad thing. I'm not saying that's a terrible thing. I'm just saying that is the truth. You also have to remember, as far as what you see with these projects, especially on the ground level, they only let you see what they want you to see. That's the truth. So whenever you invest on the ground level with any project that's fresh out the gates, you have to be skeptical, cannot be trusting. And I'm not saying you have to be an asshole. I'm not saying that you have to be ignorant about it. I'm not saying that you have to be completely closed down to it, because there's opportunities obviously to make money. The thing is, don't take whatever is told to you with a grain of salt. Always research the teams, and find out as much as you can about the teams as far as execution. Look for a track record or a history. Now, in a lot of cases, okay, and this isn't always the truth, but in a lot of cases, if the team is already struggling and failing, the likelihood that they're going to succeed is very minimal. I'm talking they have a good, sad sob story, which I'm very familiar with those because I went through those myself as an entrepreneur. The likelihood for failure is extremely high because the cards are already stacked against them. But those are the ones that if they do make it, because they've already paid tuition from all the mistakes, and if they do make it, those are the ones that are head knockers. I'm serious. They make some serious money. So always remember, when you're getting in the ground level of these projects, okay, not something that's already established, already in the top 10, CoinMarketCap or CoinGecko. I'm talking fresh out the gates, something that's offering you, seed, private, or, initial getting into the public sale the very first time on an exchange. Always be skeptical. What you see is not what you're going to get. The second thing that you need to know, you are always buying someone else's bags. And for a lot of you, okay, who've been in this space long enough, you already know that. For a lot of the other ones who are coming into the space fresh, okay, I'm talking maybe 6 months to a year fresh, don't quite appreciate what I'm saying here. You're always buying someone else's bags. And those bags are much more significant the earlier the project. And this is the truth. Let's just say you have the opportunity, okay? You got into a project really early. You found the project and you think it's good. The team checks out. You see what your risk factors are and you're like, okay, I'm going to put money in. And let's just say you get in the seed round. You get in the seed round for a token and the tokens are worth 1 cent. Beautiful. Then they're going to have 3 other rounds behind that. Private 1, private 2, and then public. Sometimes they only have a PV1 and then public, okay? So between 2 and 3 more layers. When it hits private 1, your seed token could already have gone 5, 10, and I've even seen them go up as far as 30x, okay? Insane. It's just completely insane. So that 1 cent, all of a sudden those tokens are going to be selling for 10 cents, okay, at private 1. So you just made money. You already made money because those guys bought at 10 cents. Then private 1 closes and you have private 2. The tokens sell for, say, 20 cents, okay? And then at public, they go to sell at public at 50 cents, okay? You get what I'm saying? So when you go on the exchanges and you buy those bags, you buy those initial coins that first hit the market, you're buying the bags of someone who went in there and got the seed, private 1 or private 2. Now, in some cases, you do have token lockups, okay? There are lockups. I'm going to tell you right now, like I said in the very beginning, what you see is not what you're going to get. There's a lot of times, especially projects who need development, that need to spend money, will work out deals, different deals with their different investors, where some investors will have the ability to have no lockup, no vesting. It happens. It always happens. Now, something else that I need to bring up to you is, remember how I said 90% of projects are promised to deliver and 10% aren't. The 10% that are not a promise to deliver had pretty good substantial investment in the very beginning. That means they did something smart, they got good seed money, and they probably got strategic money in. People who can put money in to help them do audits, can help them build, they can help them do whatever it needs they need to achieve to go to market. And those are usually longer term investments because of the fact they took the time to build. Those right there, okay, those right there, the ones that already have a working product that go out, those are the ones where you are more likely to get dumped on and get dumped on hard, just because of the long-term commitment and the amount of work that the initial investor put into the project. It's not a bad thing. It's just someone has to get paid for the amount of money and time they invested to get something off the ground and get it into market. So that is something that you see happen. So if something does have a working product, okay, something that's viable, something that's like, oh my God, there's so much code here on GitHub and it's beautiful and it's working. They have clients already. The moment it hits the public exchanges, even though the exchanges with the market makers will help pump the price. So because the exchanges look bad if their community gets shit on, all right, at some point, that market maker is going to get pulled because it's expensive to hold those prices up. And then, bam, you get shit on. And I'm not saying anything bad about the projects that are doing that, because people have to pay bills. People have to make money. And then your 90% projects, you're promised to deliver ones, it's hit or miss. It really is. I mean, because you have to pay close attention. And if you're not in the inside, you're usually at risk. You're usually at risk because if something goes wrong, or they say, oh my God, we just made $5 million, and they get lazy. They get freaking lazy. I've seen it happen, and they stop coding. Don't even start building, and the project just dissipates. The coin gets sold off. People lose their money. That happens as well, too. So I'm not trying to scare you. I'm trying to make sure you fully understand the dynamics here. Things that are already in the top 10, our coins are already in the top 10, a lot of that doesn't apply. You are going to be buying someone else's bag, because obviously someone else has to sell. But the bags that you're buying when a coin is already established and trading in the top 10, 20, 50, well, you're not necessarily getting yourself wrecked or having some more sort of a whale try to dump on you. At this point, they already have a community and they have traders involved. It's just those early ground level real opportunities. I mean, you're rolling a dice. It's all dice roll. But if you hit it, if you shake that dice and you land it just right, the amount of returns that you can get if it's just right is insane. Okay, so I mean, those two things. It's not always, what you see is not what you're going to get at the end, and you're always going to be buying someone's bags. So make sure when you're going in on a project, especially early, you position yourself to where you know whose bags you're going to buy. Okay, but listen, that's all I have for today. I want to hear you guys' comments. I want to know what you guys think about today's video. All right, guys, so make sure you smash subscribe, hit like, the whole 9 yards, and I'll see you guys tomorrow. Peace out.